Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from mpiinvest.com. So, coming to the market yesterday, the market, of course, absolutely opened with a fantastic gap up by more than 100, almost 100, 100 points. But from there, it kind of stayed and that level sustained till almost, the first half of the day. But then came the second half when we could see the entire market falling, led by banks. So big selling in HDFC Bank, ICICI Bank. So basically, it was the banking sector which actually saw a decline, and that actually brought the entire market down. In fact, that time Reliance also did not support, at least otherwise that would have kind of stayed stable. But then, of course, good thing is again on a close to close basis, Indian markets have closed slightly positive. But if you look at this thing, is it that Indian market is falling too much? Is it to be worried? You really don't have to worry because see yesterday, and if you compare that with the close on the close to close basis, so like I said, it is closed positively. That is actually looking fine, and the best part is Nifty has been holding that support of 250 to 300 range. So that is a good thing as long as markets are not falling below that. There is some bearishness. The FIIs have continued to sell. Yesterday also they've sold for almost 500 crores. But then interestingly, the DIs have again bought for more than 1,000 crores. But still, the markets actually fell. So at this point of time, I kind of would like to consider this that this was more of a expiry related volatility because the institutions have very good positions in both the options and futures, and that can actually lead to this volatility as well. So however, we cannot confirm the trend change to bearishness until this 250 to 300 level is broken at this point of time, and only if that is broken probably we could confirm that okay, markets are getting bearish for now. But otherwise, if you look at in general, things are kind of looking okay. So yesterday there was an important data which was expected from the US. There was nothing but the US GDP data. In fact, the GDP has actually come at 2.1 versus expectation of 2.4. Now this is something bad, isn't it? Because the GDP has actually gone down, so that should be bad. But then at this point of time, US considers this bad data as a good data, and we could see US markets continuing to rise yesterday. So no other reason but the expectation is that since the GDP is coming down, the economy is not doing well, so naturally they are expecting the Federal Reserve to kind of stop on the rate hikes. So that is the expectation, and that's probably pulling the market up. And not only that, AI stocks are continuing to rise. So with all this at this point of time, it is like a clash between the Federal Reserve and the AI stocks. So people are not ready to leave the AI stocks, and Federal Reserve are not ready to kind of stop telling that they are at least going to raise the interest rates. So I've told you earlier this thing that at one point of time they will actually announce that there are going to be no rate hikes. Now, at least, though they have not announced it yet, at least people are kind of clear that at some point of time, or it's not very far, when they will start doing that. Even the unemployment data in the US has actually come out stating that the number of jobs have actually declined much lower than expectation. So with all this, basically US markets are seeing all these negative data as a sign where Federal Reserve can probably stop rising the interest rates. So that is something which is kind of driving the US markets right now. So US markets have continued to be bullish. They've been closing continuously in the last few days, every day in green. So that is the situation. So in fact, because of that, naturally we could expect again a gap up opening today in the Indian market. But before that, talking about Asian markets today, Asian markets are trading mixed. In fact, today the PMI data for that is the Purchase Managers Index data for China was due, and that has actually come better than expectation, but still below 50. So below 50 means naturally contraction. That is means their Purchase Manager Index has actually come down. So which is not a great sign. Still, it continues to be in the gray area at this point of time. But then it is better than expectation. So probably markets have taken it with a cheer. The Asian markets are kind of positive. Even Japanese PMI data came in, and they also have not been great. But then of course market has taken it with a cheer kind of. But then if I look at a slightly medium term, I would say this is not great because that probably shows that the growth in the global markets are kind of getting little high. I mean, sorry, the growth is actually kind of coming down. So that is kind of a feeling that gives me feeling that probably market globally could slow down for some time, and then the demand has to come back. So that is something which could be kind of holding the markets globally. But apart from that, if you look at India, so with all this, naturally, when the global markets are plus and the Asian markets are also positive, Indian markets are also expected to open with a small gap up today. But will that sustain today being the expiry, that to the monthly expiry? So monthly expiry could keep it really volatile. So along with monthly expiry, there are also few important data that's coming out today, like the Indian GDP data is coming out today evening. So all these are going to keep the markets cautious at this point of time. So even if there's a small gap up, will that sustain? And if it sustains, will it sustain for the entire day, or will there be a big fall and then a rise by end of the day? So these are all the questions that could be looked at. But my expectation is that the markets would not be able to sustain the gap up for initial part, but later if it's able to sustain till end of the day, probably we could see some short covering rally. So that's the expectation for now. However, the markets are going to be super duper volatile today. So I would kind of stay away from trading much today. But then, yes, we are already sitting with a decent point, more than 0.5% return already on this week, with very safe trades that we are taking, and that's probably going to close today. So in fact, I would prefer taking next week's position than holding on to this week's position at this point of time. Apart from that, the economists have actually given a report that India's manufacturers, margins have actually increased because of lower input cost. So that's exactly why, in spite of rate hikes by RBI, Indian markets have been able to sustain profitability. Because if you look at the last quarter results that came, most of the companies have actually come out with good results. So that's because of the lowering down of inflation. The input cost has gone down and margins were better. That could help the companies kind of stay afloat strongly. So that is something which is good. But then talking about a little negative things, since Chinese PMI data has come out lesser, focus would be on metal stocks at this point of time, because metal stocks actually rallied yesterday. But then will they see a come down today, or will it further rally? Because at this point of time, even though Chinese PMI it shows contraction, it kind of shows that it was better than last month. So will metal stocks take it positive? That's something that needs to be looked at. So apart from that, today, like I told you, the focus would be on monthly expiry, and second thing is India GDP, which is due today evening. So both these factors would be kind of holding the market at this point of time. But globally, the markets are good, so there is no reason for Indian markets to fall. But at least for a short term to medium term, I'm expecting Indian stock market to be within the similar range. So one thing I'm happy about is we had expected a big move yesterday, and I in the morning podcast we had discussed this, right? So that did happen yesterday, but today also could be a follow up, is something which I expect. So let's see how things go. But on a medium to short term basis, I'm telling you, I'm expecting the markets to kind of consolidate in similar levels of 19,000 to 19,500 for next 1 or 2 weeks. That's the expectation. At least I'm not expecting markets to go down much from here. So let's see. However, like I always say, we can never predict the stock market, but just anticipate. So this is what I anticipate at this point of time. So let us see how the week closes tomorrow. We'll discuss more details tomorrow morning in the morning podcast, and of course tomorrow I'll be leaving back to Bangalore. So we'll be back on track from Sunday. So Sunday we should have a good market pulse podcast. So that's it for now. Wishing you all a great expiry day. This is Srikanth Rajan signing off. But before we leave, of course, do remember to press the like button. If you love the content that we share, that of course motivates us. Do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.